Hello everyone, welcome to the EURUSDMay23rd2012 daily analysis for the Euro US dollar FX for Wednesday, May the 23rd, 2012. Well, a continuation of the trend to the downside today. Previous day's trading, we saw the market make a lower high and a lower low with a large black body candle. Today, again, another large black body candle, and we've taken out the strong important area of support that extended roughly from about the 127.12 area down to this swing low at about 126.37.5, and we've taken that out in a fairly significant way, so quite a strong trading day today. The size of the body has reduced slightly compared to the previous, but it's not really enough of a loss of momentum for there to be any major concerns about the sellers not being strong enough to continue taking the market lower. We have had the sellers just close at the important support level, however, down at 125.86, failing to close in a strong way down below there, so that could be quite significant. And moving forward, that will be an important level tomorrow, 125.86. And as the market's trading at the moment, we are just testing down below there, so a crucial level for this market. We do have a small shadow on the bottom of this candle representing the sellers losing commitment down around that area, so extending down to 125.44 where the low is will be important. There is strong support down at the 124.55 level if we can beat that barrier at 125.44, and down below there no major support until the market trades to 121.55. so these levels that the market may be approaching in the next few days are crucial to this market having any potential rally. If we see the market trade down below there, we could quickly see it trading substantially lower, so it's an important trading coming up over the next few days. In terms of the Fibonacci retracement of this previous upswing, and we are in a downswing now, in a first time frame downtrend, we saw the market take out the 100% level today, and we are testing to the 161.8% level, and we've traded almost to there, and we've seen price rejection. So that area there, the 125.28 tomorrow, will be very important to this market moving forward. If we do trade down below there, there may be some support coming in from the 261.8% extension of this previous upswing at 123.46. Now we'll just take a quick look at the extension of the Fibonacci extension of this previous downtrend, which was followed by the uptrend, and now we're in this downtrend, and we're looking at the relationship of this current downtrend to the previous downtrend, beginning at this level here around the 130.67 level, and we've seen the market interacting with the 61.8% level today, finding support down around there. So that was at 125.61, and we've seen buyers coming in, so that in conjunction with this 125.86 level makes this a very important area of support for this market. If we do trade down through there with regard to the Fibonacci relationship here, the 78.6% level becomes important, not as important as the 61.8% or the 100%, which is down at 123.99. So some of the important levels. But moving forward tomorrow, as I've mentioned, this 125.86 and now the 125.61 Fibonacci level are crucial to this market. In terms of Ichimoku, we have the market bearish in all three timeframes, obviously trading below the cloud, below the Kijun-sen, and below the Tenkan-sen, and the Chikou span is below the corresponding price action, so that's confirming this bearishness that we're seeing in the market. And in terms of the short-term dynamics, we have the sellers in control, and they're confirming this bearishness that we're seeing in the short-term time frame by the sellers supporting the current candle to the downside. Having said that, as I've mentioned, however, we have seen the sellers lose some commitment down around this important level, around the 125.86 and down to the swing low. If we do see the market retrace, then there is possibly strong resistance at the Tenkan-sen, which is at the moment trading at the 127.47 level. At the moment, with the way this candle is developing, we have the 127.24 level that will probably be important as the market does rally. And then we do have some resistance up at the 128.57 level, and then a potential resistance at the Kijun-sen at 129.13. So moving forward tomorrow, some strong support down below at 125.86 and then down to 124.55, which are crucial levels for this market over the next few days. Potentially very strong support, however, if we do see the market rally. Potentially strong resistance if we do see the market rally at 127.24. Next, moving to the Aussie dollar US dollar FX, and here we have today a candle that continues the trend to the downside with a lower high and a lower low. Once again, a black body candle, relatively large compared to some of these other black body candles, but significantly less compared to the previous day's candle. It does suggest that these sellers have lost some momentum, or some of the momentum that they had previously. So that does cause some reason for concern. However, we have had the market close substantially below the previous close, so the sellers are still keen. So that's something that does suggest potential for the trend to continue down. But we have this large shadow on the bottom, and we've seen the sellers lose quite some commitment as they tested around the 97 level, with some buying coming in. The sellers have also failed to close control of this market for the trading day between the open and the close, so that does suggest that they are starting to lose some momentum as well. Now, in terms of the pattern that we had here, the prior downtrend, the large volatile flag and the breakout from below there, from about 101, or roughly about 102, we did have a potential target down around the 96 level, and we are rapidly approaching that level. So this has been a very good pattern to trade. Quite often these patterns work out very well in FX markets, and this is one where there's a substantial amount of profit built into anyone that would have traded that breakout from that pattern. This level at 96.62, which coincides almost with the target, is a very important level for this market tomorrow. Below there we do have support down at 95.36, and then no solid support until we trade down to 93.86, which was a previous level of resistance, which now has potential to hold as support. If we do see the market rally, then there is potentially strong support at 98.59, then at the Tenkan-sen, which is trading at the moment at 98.86, and as I've mentioned quite often previously, when we have a market with solid downside momentum, the Tenkan-sen is the first area of resistance for this market in this case. Above there we do have the round number $100, which will hold as very, very strong resistance for this market if we do trade higher, but there aren't any major signs that the market will trade to substantially higher levels yet. Now, importantly, looking at the Fibonacci extension ratios, and we're comparing the current downswing in the market, the current downtrend in the first time frame, to the downtrend prior to that. So we had the downtrend in place, change of trend for one candle to the upside, downtrend again, and looking at that, we've actually tested to the 100% level. So we have a quality of this downswing and the current downswing and price rejection. So that does suggest that there is good potential for a change of trend to the upside, combined with the fact that the sellers seem to be losing some momentum. There is potential for a change of trend back to the upside now. If we do see the market break out down below there in a bearish way, then the 161.8% level may come into play, and that's down around 94, but that's quite a bit lower than where the market's trading at the moment. In terms of Ichimoku, once again with this market bearish in all three timeframes, trading below the Kijun-sen, the cloud, the Kijun-sen and the Tenkan-sen, and the Chikou span is confirming the negativity that we're seeing in the market at the moment. There is potential for the Kijun-sen to turn flat. At the moment we have this current candle developing, and if it does stay in a similar way, then we may have a flat Kijun-sen, which could suggests that there is potential for the market to rally, but we do need to wait until that candle is complete before we see how the indicator ends up. So moving forward tomorrow, a bearish market in all three timeframes. The sellers in some situation here with the close below the previous close are supporting the trend to the downside in terms of short-term dynamics, but in other terms they aren't supporting. They're failing to support, with the sellers losing commitment and them losing control of this market in terms of the short-term dynamics, in terms of this current candle that's just finished trading. The buyers, however, aren't supporting the market in any way. So even though we've had this loss of momentum by the sellers, there's no strength from the buyers, so that is important moving forward. But we still should be watching the high of the current candle for a potential higher high and higher low. And as I've mentioned, there is potentially strong support, resistance at 98.59 at the Tenkan-sen, which is currently trading at 98.86, but also strong support down below where the market is trading at 96.62.